welcome. You're watching Your Trades on ET Now with me, Snehisha, and with me is Priyanka. Let's take a look at how the markets have fared today, and well, what a stellar recovery coming in for our markets today, especially in the last hour of trade. Nifty recovered very smartly today and managed to close at that 21,982 level, very close to 22,000. And Nifty Bank also up almost 0.4% on close at that 46,120 whereabouts. And when we look at the broader markets, then yesterday, remember, broader markets were leading the cuts coming in, and they were down more than the benchmark indices. Today, broader markets seem to be doing better, and both mid cap and small cap in tandem with Nifty Bank doing as well as Nifty Bank, and well, in the green when it comes for all of these indices as well. And when we look at the sectoral indices and what's happening with the sectoral indices today, barring two indices, you had everything else closing in the green today. Barring media and IT, you had other sectors that managed to close in the green, with Nifty PSU Bank being the top winner today, up 1.3%, followed by FMCG, Pharma, Energy, Auto, Realty as well. And well, what were the other top news for the day today? AMFI, that was in focus today, and AMFI has called for a meeting to mull the protection policy. This is especially on the back of that frothiness that we have been seeing in the mid and the small cap space coming, and the action that AMFI had taken over it yesterday. And also in other news, the government has gone ahead and approved 3 more semiconductor units, and this is a big development for the market as well. And Priyanka, what else were the top news of the day?
Well, a lot of action from the regulatory and also from the ministry as well. A lot of action on the semiconductor units, and government has also in fact spoken about that they've approved 3 more semiconductor units, and that's the word coming in from Tata Group also. Chairman N. Chandrasekaran said that he announced his semiconductor chip fabrication unit coming very soon in Dholera, and that's what came from Tata as a comments. Other than that, auto pack, which will be focused as the auto stock started reacting much days before auto sales number. February trends coming in very soon now, where the PV demand, CV demand, and of course tractor sales demand to be watched out for. So these were the key of the top stories today. But let's understand what is the technicals looking like right now. We are done with expiry. Kunal is already with us to talk about how is now Mars series looking like. Kunal, clearly market was very jittery these 2 days, and now since we saw a sharp rebound coming in the last hour, what do this indicates? Are we in for a positive start to March expiry now?
Well, it mentions happy ending for the Feb series, because I think if you'd asked me the question yesterday, then of course the market reaction was on the extreme negative side. But today's price action for the index right from the word go, I think we saw an intraday recovery for the index in the first half, then a mild bit of pullback hit again. But in the last half an hour, last 1 hour, a complete recovery for the indices, both Nifty and Bank Nifty, and that too on the back of expiry action. So that, I believe, should probably be resonating quite well across many trader sentiments. What we've also done is we've managed to bounce back from a very important support trend line on the Nifty, and that support trend line starts off from the January lows when the index was at 21,200 levels, and it's a classical support trend line which the indices have tested today. So I would believe that this is a very important kind of a bounce back. The Nifty and the Bank Nifty both closing above their key psychological levels of 22,000 and 46,000 respectively also adds to the positive sentiment for traders to carry forward the position. So I'm expecting that hopefully the start of the March series could be on a much more positive note rather than that extreme volatile note what we've already seen the month of February so far.
Well, that's a reassuring outlook coming in for the March series as well, Kunal. But amid a market like this, where we've been seeing some volatility over the course of the week, what are you picking out for our viewers? And well, based on today's action, I'm assuming both your calls are buy calls?
Well, yeah. So I've been maintaining a buy stance over the last many days. So again, not an exception this time around. But the idea is to now try and pick more of contra buys. So 2 buy calls. City Union Bank, a stock which has been going into a very sharp selling over the last 3 to 4 months. I think that's a chart which is now looking attractive at 130-35 levels. So would suggest a buy with a target of 146, stop loss tweaked towards 130. And biocon is the other stock which is also looking attractive, formed a very classical bullish kind of a candlestick pattern today on the daily charts. So expecting a strong up move, 320 as a target, stop loss at 254.
All right, biocon lost a lot also in February series. Now time for regain there. Thanks very much, Kunal, for all the technical check and the top picks as well. But then now let's listen to what big market expert have to say on the market's fundamentals. Ganesh Ram Jairam, MD and head Avendus Spark Institutional Equities, believes that rural consumption patterns are changing. He also advises to be watchful of the spending patterns. Let's listen to him.
Slightly different view that we have. I will still not say that rural has been weak over this few years. Actually, if you look at how has tractor sales done, not the current year, but the preceding 3 years, tractor sales were good actually. So I think consumption patterns are changing even in rural quite significantly. You look at e-commerce companies, even the likes of Flipkart or Amazon, and they give you pin code wise data. You look at, actually they are growing very, very well, okay, in rural pockets. So I don't want to fall into this trap of saying that rural has been slowing down. I actually think that consumption patterns have been changing there as well. The incremental spend of the consumer has been more towards categories that were historically not a large proportion of his spend. It could be on, say, electronics, certain categories of electronics, more towards, say, like mobile phones or accessories related, AirPods and earphones and the likes. Spend on that has become a very, very large line item in excess of 5 lakh crores actually. So those are things that are changing the historical patterns of consumption that we are used to seeing, which are more FMCG, two-wheelers, or QSRs, or it could footwears and apparels. I think the consumer has evolved a lot differently to how they are spending, and we need to be watchful of that as well.
All right, that's the word from the wise coming in from Ganesh Ram Jairam on consumption and the trend that he's seeing right now. But viewers, with that, we'll slip into a very short break on this edition of Your Trades. We'll be right back with more news and updates, so you stay tuned.
Welcome back. MFI has called for a meeting of stakeholders to discuss directions of SEBI on small and mid-cap funds. ET Now has learned from sources that MFI is proposing a uniform disclosure on the risk associated with small and mid-cap portfolios. Any restrictions on investments will be left for individual fund houses to decide. Ankur Mishra has more details.
The market was definitely worried after the SEBI direction which came to Mutual Fund Association, that is MFI, and after that MFI came into action and they have held a meeting regarding the required disclosure which needs to be given as per direction by SEBI. And what we have understood through sources is that there is unlikely to be any restrictions which will be imposed uniformly on mutual funds, but the companies, the individual mutual fund houses may give the risk disclosures. Now, what will be that? The restrictions may be left to the individual fund houses call. However, there will be uniform disclosures on the risk associated with small and mid-cap portfolios. Remember, there was a letter which was written by SEBI to MFI, and after that, MFI had advised all the stakeholders that such kind of a letter has been received by SEBI and we have to respond within 21 days on framing a policy. But for now, we understand that mutual funds are going to give more and more disclosures. Now, what can be them? As far as the redemption is concerned, what is the risk associated with it? So there may be different kind of buckets which will be created. Risk-related hypothetical liquidation of portfolios during stress time. Let's say 10% redemption or 30% redemption, and also there may be disclosures regarding the concentration of portfolio, any concentration of investors of top 5 or top 10 in both. Apart from that, we also learned that portfolio constructed between large, mid and small valuation parameters may also be disclosed by mutual fund companies. Remember, there are fund houses which are already limiting the investments in small and mid-cap funds For instance, State Bank of India mutual fund, Kotak, there is already some restrictions which are imposed by the mutual fund houses, but it will be left to individual houses to decide that how to go ahead with it. There will not be any uniform restrictions which may be proposed by MFI, but all in all, more disclosures are on the anvil by MFI with all the stakeholders, because whatever the risks are there, the customers needs to be aware. In the event of any downfall, in the event of redemptions, there may be proper disclosures which will be given by mutual funds.
Well, thanks Ankur so much for all of those details. But after SEBI's advisory on mid and small caps to mutual fund houses, we caught up with Feroz Aziz, the Deputy CEO of Anand Rathi Wealth, on his reaction. We also managed to speak to Dhirendra Kumar, the CEO at Value Research, and also A. Somaya of White Oak Capital. Let's listen into what sense they are making out of this development.
There are provisions like, if I remember right, in 2008, FMPs used to be liquidatable. But there was a directive where FMPs which were brought in which were bought from a perspective of an exit possibility were locked in as well. We also saw some cases during adverse situations. A fund has the provision to put a stop to redemptions. I don't think it'll get there, but it's each asset management company's reaction to that second point. I think exit load changes could be there with a 6 months window for a person to act, because that's also a provision. If you make any changes to the KIM, you have to give a person 6 months window or 1 month window to exit if he doesn't like the new rule. We had gone long on small cap from 5-7% as implied exposure in our model portfolio to almost about 27%. We are wanting to book profits anywhere in the next 1-2 months from 1 or 2 schemes of small cap, because that's generated about 55-60% absolute return and about 30% alpha over Nifty for this year. Because SEBI is looking out for the investor. At the end of it, if somebody read the essence of it, they don't want volatility for the investor, and that's what the investor wants himself. So I don't think there's a reason to panic, and I don't think people read too much into it.
Investors, who are doing their SIP can just carry on with their plans, because when you look at the 23% annualized return over the last 10 years, if you look at all the happy investors who are doing their SIP in small cap fund, the phenomenal growth that they have witnessed, the small cap universe, which mutual fund used to invest 5 years back, was about close to 300 companies. Now that has grown to 500 and nearly 600 companies. So 300 to 600. So and the growth of this market is entirely a function of sustained money flowing into it. Many of these companies in which mutual funds are attracted, they have invested heavily. The prices have gone up. The promoters still have 70-60%. They are the biggest shareholder. And this is the segment of the market where we don't have the diversity. This is the segment of the market where, in small caps, NPS money does not flow in. In this small cap, the EPF money does not flow in. Even FII money doesn't flow in. This segment of the market is entirely individual punters and mutual funds. And for individual punters, the universe is large, nearly 3,000 companies. But for mutual fund, it is 580 companies or so.
All right. Now let's go further and let's hear some corporate voices also. Yatharth Hospital believes standardization of medical procedure rates will improve affordability in the healthcare space. Let's listen to them.
When it comes to treatment rates, let's look at across 3 different segments. So one is cash payers, or the self payers. So, and then the private insurances, and third is the government schemes like CGHS, ECHS, and ESI. So when it comes to cash or self payers, it is usually, if comparison to private insurance, private insurance is 15 to 20% lesser than the self payers. And then from the private insurance prices, government rates are even beyond 15 to 20%, much more cheaper. So somewhere around 30 to 35%, it's cost less when it comes to CGHS rates if a person is paying from his own pocket. Now, it's important to also look at how much the volume of the CGHS, is being derived in the hospitals. So I think regulating, the rates would also require regulating the private insurance rates. So hospitals right now, yes, certain tariffs are being provided by the private hospitals, but a lot of proportion of hospital business also comes from the private insurance space. So regulating the private insurance rate as well as the hospital rates would be, a challenge across different states and across different treatments. But if it does implement it, yes, it would have certain impact. But yes, it's still to be seen in what manner it could be implemented.
Well, shifting focus from hospitals to Motown then, how did automakers perform in the month of February, and will they be in the fast lane, or are they expected to hit a speed bump when it comes to the auto sales number for the month of February? Shrishti is joining us with more details and the answer to both of those questions. Hi Shrishti, take it away.
So for the month of February sales, we are expecting it to be a mixed bag, with all eyes will be on the two-wheeler segment as well as on the passenger vehicle segment, because segment-wise, we are expecting passenger vehicle segment to do fairly better in terms of the YOY sales data. But on a month-on-month basis, a slight moderation is what we are expecting. The demand is stable. There's no substantial recovery in the small car segment is what we are getting to understand, and the CNG is now getting to have some bit of a push in terms of the sales. If we talk about the numbers, then M&M, Tata Motors as well as Maruti Suzuki, they are all expected to experience a 10 to 11% of decline on a monthly sales data. If we talk about the two-wheeler segment, then we will have our eyes on the kind of a rural play these companies will come out with, because exports are expected to be stable. There's expected to be a push because of the marriage season as well. And if we compare the numbers on a month-on-month basis, no much change is expected there, but definitely on a YOY basis, we are expecting Bajaj Auto as well as TVS Motor sales to jump by 17%. From Hero MotoCorp, we are expecting an uptick of 8%, while for Eicher Motors Royal Enfield, almost a flatter set of growth is what we are expecting. The commercial vehicle segment is could be a little bit of lagging behind, because the volumes are expected to decline due to the pre-election slowdown in terms of the orders. And similarly, on the sales data, we are not expecting much. Indeed, on a YOY basis, we are expecting to see a single-digit decline across the players. Tractors could be an interesting play as well, because from the reports we are getting to understand a mixed set of commentary, because a month-on-month sales is expected to rebound on a low base, but still the weakness persists in the rural markets. If we talk about M&M, we are expecting a 5% decline on a monthly sales data, while for Escorts, we are expecting a 12% jump. 6,925 units is what the company is expected to report. So all eyes on the auto sales data.
What we pick from here is that stable demand expected from PV, tractors to rebound because of a low base, but then lagging behind could be CV segment. Thanks very much for all these details. Well, that's all in this edition of Your Trades. Stay tuned for more updates. Thanks for watching.